Wasting money on cures. Forgot how to fix myself. They say that time is free. Then why is it so precious? Oh, I'll save memories in my head, like Polaroids on walls. They remind you to look ahead. Time is running out. Time is running out. Lately I've lost my track. I've sailed the deepest seas, hoping to find something to bring back better times. Oh, I'll save memories in my head, like Polaroids on walls. They remind you to look ahead. But time is running out. 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 Time is running. Time is running out. But time is running out. What if my best days are over? They can be over. They can't be over now. Time is running out. What if my best days are over? They can't be over now. Time is running out. Time is running out. Time is running out.
Good afternoon, it's Jim here. Welcome to our latest AQA A-Level Business session. You might notice it's just me on my own today because Graham's been called away for something this afternoon. So he'll be back with me early next week for our AQA warm-up and student clinic. So it's just me for the next 30, 35 minutes or so. And we're just following up and building on what we covered yesterday. We looked at 12 mark questions yesterday and took a first look at our case study Sparkle Products Limited, SPL. So we're going to build on that today. And today's session has an international flavour, I think it's fair to say. Let's make a start just whilst people are joining us in the live chat. We've already got over 100, in fact, almost 200 people in there. So let's just, whilst people are joining us, let's have a go at a big reveal. We didn't do one yesterday. I'll give you a clue. The answer is not Greg's. It does have an international flavour. No, Uma, Graham's car's fine. Nothing wrong with his car. He will be back. He works very hard. So all good. Here's our first clue. This product today, not a business, invented in 1886. As Graham would say, if you're thinking of a product that was invented in 1885, well, it's not that one. Long time ago, 1886, and it's still around, obviously. 2 billion units of this are sold each day globally. Keep an eye on the live chat to see who's first in to the live chat with the correct answer. The AI will automatically select it. It's all very clever. The product was once offered as a medicine for headaches. Clue 4, trademarked a shade of red in some countries, not all countries. And Ella's saying Greg's sausage roll, possibly. And the product's ingredients are a closely guarded secret. It's not paracetamol. It's not Lucozade, Joe. Good answer, though. Lots of people have correctly identified the answer as Coca-Cola. And according to my sources, Nathan was first in the live stream. So Nathan wins today's prize for being quickest off the mark in a live stream. Yeah, Coca-Cola. Now we'll come back to Coca-Cola. Interesting example of international strategy, and that's the focus for today's session. We looked at 12 markers yesterday. Obviously, we've got our paper 3 clinic or Q&A early next week. We'll deal with today, we'll look at the 20 mark questions and the 24 mark questions. So typically question 5 and question 6. Paper 3, there shouldn't be any surprises in terms of paper structure. I know we were not surprised, but there were 5 9 markers in paper 2. Well, that's been done before. They've just gone back to answering or asking questions in the old way, really. But there should be 2 12 markers, 2 16 markers, a 20 marker, and a 24 marker. Okay, well, I said today had a flavour of international. What I've done is I've gone through the spec to try and pick out the areas that haven't been closely examined so far this year, or maybe in some cases not for a year or two. We're not going to be doing any calculations today. You'll be relieved to hear. I've picked out 6 of those areas on the screen here. Let's give the random spinner, sponsored by Greggs. And over to you in the live chat to give me ways that exchange rates can impact a UK business. Perhaps just give me 1 if you don't fancy giving me 2. So ways that exchange rates can impact a UK business. What do we think? Obviously, I'm trying to deal with the live chat as well as answering questions as we go. Definitely exchange rates are very closely linked to the whole issue of doing business in international markets. So Osman has very usefully added in the 2 acronyms that help us identify the impact of changes in exchange rates. So spiced, stronger pound, imports are cheaper, exports are dearer, and the reverse, a weaker pound, a depreciation of the currency, imports dearer, exports cheaper. Chilling with Chops has done the same thing. Yeah, so let's pick out a couple of examples here. Let's pick out Uma's a UK business which imports raw materials. So a situation there, an appreciation of the pound, a stronger pound would be good news, yeah, because it would reduce the costs. Imports cheaper, spiced, exports dearer. And of course, the reverse would be the case. If there's a weaker pound, then you would expect your import costs to go up. So yeah, I just picked out 2. The cost of imports. So lots of businesses in the UK import either services or goods, products such as raw materials. Well, if you pay for them in foreign currency, then exchange rates obviously impact your costs and therefore, in theory, your profit margins. But similarly, if you're an exporter and you're selling to international markets and pricing your products in pounds, then customers, the competitiveness of your selling prices is impacted by the exchange rate. Well done. Let's spin the wheel again. So hopefully, yeah, exchange rates gets grayed out by the totally random spinner powered by AI. Don't know how many more times I'll have to say that. Okay, now here's a model and theory that's dear to my heart and probably dear to your heart as well. So, can you give me 2 of the approaches to managing businesses that our good friends Bartlett and Goshal suggested? What do we think? Gabriella, like a flash, maybe almost anticipating that it might be coming in. Transnational and multi-domestic are 2 of them. Ruby's gone with international. That just leaves 1. We've got all 4 of them here. Transnational, international, global, and multi-domestic. Well done. Let's just confirm that with the stuff that I have on the screen. There we go. International, multi-domestic, transnational, and global. A little quiz question for you in the live chat. Which of those 4 strategies do you think Coca-Cola adopts? Have a think. Maybe even in the live chat, just for 30 seconds or so. Which one of those 4 do you think Coca-Cola adopts? I've had a go. I mean, there's no right or wrong answer. But which one and maybe why? Dan saying transnational. James saying transnational, but others are saying global. 1 or 2 people saying multi-domestic. So that just leaves 1 or 2 more. So don't forget, Bartlett and Goschal don't need to be an expert in the model, but essentially they suggest strategies based around two dimensions, don't they? Firstly, the need to be integrated globally. For example, having all of your systems, processes, production, marketing integrated around the world. And then also the need to be responsive to local market needs to the extent to which that's high or low. So it's all about sort of global integration, or the need to be integrated from a sort of cost efficiency point of view, as well as the need to be responsive. Yeah, and it's a tough one. Here's what I've gone with. I think it's transnational. I think it's somewhere in between multi-domestic and global. So therefore, it's like transnational. So, and the reason for that is that actually, I think Coca-Cola, the way that they've operated, not since 1886, but certainly since in the last 30, 40 years, is they really have integrated globally. So brand identity, production processes, methods of distribution, all that kind of stuff, very closely integrated to be efficient, but also look around at how they operate in markets in terms of branding, in terms of product descriptions, promotional campaigns, all that kind of stuff. Very tailored. You might say it's just one can, but it's not. It's very tailored to local market needs. So I went with transnational. And I think Baby Spice, it's good to see the Spice Girls are with us today. Agreed with me. Standardized products, but also different flavors, different packaging, all that kind of stuff. No right or wrong answer to that, but just a little distraction whilst you move on to the next spinner. So hopefully Bartlett and Goschal disappears. You might be thinking, I wish it had disappeared a year ago. Is it the last year? It can be examined this year. Let's do two more. Let's see what it lands on. Oh, it's just turned on to factors influencing the attractiveness of international markets. So what do you think? What factors do you think might, if you were thinking of investing or entering an international market, what factors do you think would influence, firstly, whether or not you do it, but also potentially deciding? So chilling with chops, welcome back, by the way. So market size and saturation, so and maturity perhaps, maybe even the extent to which a market is mature, saturated. JT, who's obviously an economist, talks about the concentration ratio. Well, basically what that is for non-economists is who has the market share? Are there large competitors who dominate the market? Potentially that's a barrier to entry, of course. Izzy's gone for a different line of analysis, which is just as effective. The extent or level of corruption, ease of doing business, the extent to which you've got access to perhaps cheaper costs, for example, cheaper labour, and also critical infrastructure, or if you've been watching our economics live streams, next generation infrastructure. So, how easy is it to do business if you decide to enter into an international market? What else have we got here? People are saying, how long are we expecting to go on for today? Well, obviously, it's dragging a bit this session, but another 25 minutes or so, max. Dong's gone for, legislation, the market growth rate, the extent to which you've got access to a pool of labour and other resources, level of infrastructure, that kind of stuff. And I like James's answers as well. Definitely the whole issue around open trade versus protectionism. So the extent to which there may be restrictions on your ability to trade, either to import products, to export products, any kind of protectionism such as tariffs and quotas and other non-tariff barriers. Definitely. Well done. I went with, he said, I went with, market size. Lots of people mention that. The extent to which there are existing domestic and or multinational competitors. In a lot of cases, international markets, there are domestic, local competitors who are really well established. And by definition, they probably know the market as well as, if not better than anybody else. Different customer needs and wants, which ties in with Bartlett and Goschal, doesn't it? The need to be responsive to local needs and wants. And also culture. So, for example, you could bring in Hofstede there, couldn't you? An international market might be influenced, the attractiveness might be influenced by the sort of the way of doing business, the culture. And Joe says that we could link Hofstede into this. Well, you read my mind, Joe. Read my mind. Okay, let's do one more. Then we'll get into our case study for the remaining part of this session. We've got 3 left. What do we think? I've got a feeling it's going to be Porter. James, no word on Graham's car yet. I'll give you an update in about 30 minutes. Factors influencing investment decisions. Now, this is interesting. Now, don't forget, we did have a little sort of cheeky NPV calculation, didn't we? In paper one. Was it paper one? Paper 1 or 2? But that's not to say that investment appraisal couldn't come up again in paper 3. And more broadly, factors influencing investment decisions are definitely paper 3 material, very popular with the examiner. So what do we think? Let's have a look at some of the answers coming in. There's some great answers coming in. Well done. So lots of people talking about the specific outputs from investment appraisal, such as ARR or MPV, but also it could be environmental issues that you have to consider, the sustainability issues. What have we got? Lots of people talking about the investment appraisal calculations, but Mia has really gone down the route I was thinking of here, which is this here. I think this gets to the heart of international investment and development from a business point of view, that is. It's about risk. It's about uncertainty. It's about the potential rewards. And it's about strategic choice. That's essentially what decisions around entering international markets are about. So investment appraisal are techniques to help you make a decision, but on their own, they're just techniques. They give you an answer as a number, but ultimately, whether or not you proceed with an investment, or if you're looking at maybe two alternatives, is about your attitude to risk and the extent to which you're uncertain about whether or not it's a good idea, and therefore potentially the extent to which you need to do further market research to help validate your assumptions. And also, are the rewards greater than the risks? So I think that's a really, really important point. So superb stuff, Mia. I went with risk, uncertainty. That's Mia's point. And of course, yeah, lots of people have talked about investment appraisal data. So I think a lot of it is what's your criteria? So if you do have a target payback, what is it and why? Are you looking for a percentage return? Are you looking for an investment project to meet more than one target return? But then also, how reliable are your forecasts? How well do you know the market? Who's putting the forecast together? Those are all factors that influence whether people decide to finally make an investment. Excellent stuff. Right, so I said that we were going to revisit our case study, and here it is, together with some newly created product images with our brand on it. Yesterday, we were introduced to our case study, SPL Limited, Sparkle Products Limited. And let's just quickly remind ourselves about the business, and then I'm going to set you a task, which has a very paper 3 vibe to it. So it's a family-owned business that makes household cleaning products under the Sparkle brand. I wonder whether Sparkle might work overseas. I suspect it would. It's got 3 products at the minute. It makes surface cleaners like Flash, hand sanitizers like, I know, Sanex, and furniture polish. Now, don't forget, yesterday in our Boston Matrix question, we all agreed that furniture polish should be closed and sold. So it's going to be left with 2 businesses. All of its sales are currently to the UK market, to supermarkets, and we're told that in the last 12 months, the sales of the business were 228 million. And we have an objective. The family has set an objective to double sales, so to double 228 million within 5 years. We were given some other qualitative information about the shareholders, the family shareholders wanting to take a long-term view or perspective in their decision-making. And also, as part of a consultancy exercise, we were told that the business had decided it wanted to expand into international markets, and in particular by selling Sparkle branded products, surface cleaners, hand sanitizers, into supermarkets in Europe. That was the situation. Now let's find out a bit more. So this would be an appendix. Yesterday we looked at Appendix A, which talked about the 3 different divisions. Here is an appendix that gives you 2 options. Now this is classic paper 3. Here, the business has identified 2 options for expansion into Europe, and we've named them very carefully, Option 1 and Option 2. So Option 1, exporting directly from the UK, so making the cleaning products in the UK and then exporting them to supermarkets in Europe. And is that a better option than Option 2? Setting up a factory in Europe, in this case in Poland, to then sell and supply directly to supermarkets in Europe. So there's 2 options: exporting directly, literally loading the vans up or the containers up with SPL cleaning fluid, and sending them to supermarkets, or do we set up our own factory in Poland and do it from there? And we've got some information there, option 1 and option 2. Let's stick those on the screen. And yeah, it's on the screen. So we've got some details of the investment cost, the exchange rate situation. So with option 1, we'd be selling in pounds to supermarkets. The supermarkets would obviously be converting euros into pounds to pay for their cleaning products, which they sell to consumers, whereas in option 2, everything is done in euros. We've got some forecasts for the sales impact of each option. We've got some details of when it could occur. So almost like a critical path, 6 months to be able to export, 18 months to be able to send the first cartons out of the factory, and also some information on payback periods, so an investment appraisal. So over to you. In the live chat to start with, could you give me some arguments for option 1? So let's deal with option 1 first. Now, I know a number of people have already started talking about option 2, which is fine. We'll come back to that. But just option 1, what are the possible arguments? Now, don't forget, typically with a 20 marker, you'll be asked to use quantitative and qualitative information of your choice. They will often refer you to the appendix if they specifically want you to use a particular table, but it could be that you're asked to use quantitative and qualitative from throughout the case study. And so let's build the case for option 1, and then we'll have a look at option 2. So Nathan's in there along with lots of other people. Nathan's saying, well, option 1, much lower costs. Yeah, it's what, £31 million cheaper, assuming those forecasts are right. A faster launch, it's 12 months quicker, 6 months compared with 18 months. And the payback period is shorter, almost half, isn't it? It's almost 2.5 years quicker. So that's those will be some useful pieces of data and arguments for option 1. Let's pick out a few more questions here. Lots of people typing furiously. So let's pick out a few more. I'm not meaning to say these are the best or the only options, the only answers, but it's great to see so many people having a go. So Eliza's saying option 1 is a safer option. Lower risk, perhaps, yeah. It's cheaper. It's a shorter payback period. And it could be that it's the best option because that market might be susceptible to change. So you're not necessarily investing everything into one market like that. Baby Spice is back with us. A lower investment cost, a shorter payback. And, well, if you were a shareholder that had a short-termist view, looking for short-term gain, short-term returns, then that may well influence your choice. Now, don't forget, we were told qualitatively that the family want to take long-term decisions, but that doesn't rule out option 1, but it might influence their decisions. Fergus is taking an exchange rate approach, which I think is great. So option 1 has all the costs. Option 2 has all the costs and revenues in euros. So in theory, what happens to the euro? Actually, Fergus is arguing that would be vulnerable to shocks. I wondered whether you can make the case it might be. I wondered whether it might be the other way around, actually, because if all of our revenues and costs are in euros, we're not affected by a change in the euro to pound because we're only dealing in euros, aren't we, with customers and with suppliers. So I wonder whether option 1 is more sensitive to exchange rate changes, but you can argue both. Let's move on to option 2 then. What do you think about option 2? Nathan's already moved on to option 2. It aligns with the long-term objectives of the business. So it's a long-term decision. Clearly, in opening a factory is a pretty significant change. And actually, Nathan's arguing it wouldn't be as affected by changes in the exchange rate or protectionist policies. That's a good point, isn't it? I'd actually forgotten that point, but by operating within the EU, you're operating within a free trade market, no barriers to trade, and therefore there's no barriers, no protectionism within European Union, within the single market, and also pointing out that the upside in terms of sales is significant. Which is it could be significant, particularly linking back to the objective if the business wanted to double sales. James is making a point again for option 2. I'm going to try and pick out a few more contributions here. Option 2 is 300% higher. Now, what's great about that is that James is manipulating data. So rather than just saying the sales are higher, what he's done is said the difference is 150 million and then expressed it as a percentage of option 1. That is manipulating data, which is higher level application. Peter's sort of putting a cautionary note about option 2. So the fact that there's a delay 18 months, a lot can happen in 18 months. It could be that maybe new competitors have come in, new products, new competitor launches, all that kind of stuff. So are you prepared to wait? It's quite a gamble, isn't it? Waiting 18 months. Some great answers coming through. Hopefully you're finding the whole exercise useful. There's no right or wrong answer. Some people are manipulating data. Others are using qualitative information. Let's see what I went with. And what I'll do is when I upload the PowerPoint, I'll nick some of your ideas as well, because you've got some better ones than me. Option 1. Now you wouldn't need to use all of these, of course. And I've got a little worked answer to show you, just to show you how you might integrate one or two of these points in a paragraph. Option 1, and I think that sorry, let's take a step back. There's our question at the top. So what I've done is I've written a question in the format of paper 3, a 20-mark question. Before we come back to a worked answer, the 20-mark question, the structure is just the same as a 16-mark question in paper 2. So the recommendation or decision question, it's exactly the same. It just has 4 more marks. So you've got a few more minutes to write. But the question is, which option should they use? Option 1 or option 2, using information to justify your view. So we know that we need a paragraph that makes the case for option 1. We need a paragraph that makes the case for option 2. And then we need a conclusion that is balanced, that answers the question, adds some value. Job done. So Max saying, should you write more for the 20 than the 16? No, I wouldn't. In the same way, I wouldn't write any more for a 12 marker than a 9 marker. 3 chunky paragraphs, including the conclusion, should be more than enough. It's just 4 more marks. So back to our arguments for option 1. Pick out 2 or 3 of these maybe just to include in your response. You might argue it's a lower investment. So it's 31 million lower. So the difference is 31 million. It's 12 months quicker to get to market. 6 months compared with 18 months. And then there might be there's some data there, but also qualitatively, it might be possible by using exports to just test to see whether European supermarket customers quite like Sparkle as a brand without committing to opening a brand new factory. Just do some test marketing. Use your UK capacity. They've got factories in the UK making cleaning fluid as well. Make these products perhaps with a label designed for the French market or a German market. So you just change the label, use that capacity rather than opening new capacity. So there are lots of arguments for exporting direct. It might be lower margin because obviously there's some transport costs and that kind of stuff. But overall, it feels like a lower risk option, perhaps a more flexible and certainly a quicker option. Now, what about option 2? We'll come back to the 24 marker, Amy, because we're going to have a quick look at a question on that. So option 2, just do the same and make the case for option 2. Your judgment is where you decide which option you're going to recommend. So I think a number of you have said, well, look, it's 3 times 300% higher than option 1 or 150 million, manipulating data, and link that to the objective. They wanted to double their sales. Well, we're going to have to increase sales a lot to double 238 million. So this looks like that might be more likely to achieve that. By opening a factory, by investing heavily in it, that might help speed our development of products designed for the European market, gain insights into the market. We might be accessing lower labour costs, maybe lower product transportation costs. A number of people have said it makes exposure to exchange rate changes less because everything is being done in euros. There's nothing being converted from pounds into euros. So that might be a factor that reduces risk. And it's also, as a number of people said in the live chat, it's consistent with the family desire to make long-term decisions. Well, there's nothing more long-term than opening your own factory. So overall, it feels like higher risk, slower, but potentially higher returns. Well, it doesn't really matter what the answer is, as long as you then use those arguments to form a judgment. So let's have a look at just an example paragraph. I've just written one for option 2, and then I'll show you my conclusion. Let's just go through that. A number of people asking Peter and others asking about how much application to use. Well, hopefully this next 2 or 3 minutes will give you a flavour. I think these are probably over-answered. There's probably a little bit too much in both this paragraph and the conclusion. The examiner would not expect you to write as much or in as much detail as this, but I just want to sort of help emphasise the point about using application. So for a 20 marker, 3 paragraphs, if you allow 20 minutes for reading the case study, reading the questions, that's a marker minute. So a 20 marker should be around 20 minutes, but you might be able to save some time on the 12 marker. So here's my argument for option 2. This will be the second of 2 paragraphs. And I'm just using the pecan approach. So option 2 is a better long-term investment to help achieve its growth objective. And then I need to explain how and why that's the case. So investing directly into capacity in Europe provides the best way to supply supermarkets in Europe with sparkle products profitably and at scale. The forecast annual sales of 200 million represent a significant contribution to their objective of doubling sales. So that's qualitative information. So in other words, it's almost, isn't it? If they achieved it, almost half. It's almost the same again. That would be almost all of the doubling. So setting up a manufacturing allows SPL to have greater control over production, local market adaptation, and perhaps faster response to changing preferences. And potentially the Polish factory can also offer cost savings and better productivity if they've got low labour costs. So whilst option 2 has an investment that's much more than option 1, £31 million more, so there's a bit of application there, and a payback period that is 2 years and 6 months longer, this is because option 2 is more complex. And if they were successful, then option 2 provides perhaps the best option for a really profitable way of growing the business significantly in Europe. And I think that's a nice paragraph that makes the case for option 2. I would need an option 1 paragraph to make the case, and then I would need to come back to my conclusion. Now, James is saying, would I have to say the reasons against option 1? I think, to be honest with you, in terms of getting the balance, as long as you've got a paragraph that really makes the case for option 1, and then a paragraph that makes the case for option 2, there's your balance. Your arguments are balanced, and then as long as your judgment is balanced, I think you've done the case. So we don't need to sort of challenge or provide a negative to every positive, if you see what I mean, for each of the 2 options. So 1 argument for option 1, 1 argument for option 2, and then a conclusion. That's all you need to get to the top levels of the mark scheme. Here's an example judgment, and as I say, I don't think you'd need to do quite as much as this, but read through, see what you think. So don't forget, it's a judgment question, isn't it? It's a recommendation question. The question was, which one should they use? Option 1 or option 2? So if you use the AGM method, A, answer the question. So option 1 is my recommended option for expansion to Europe. I've answered the question. So J, justify. This is because option 1 is the quickest and lowest risk option, while still enabling the business to achieve significant growth. Supported judgment, as argued above, SPL has no experience of selling its products into Europe. So that's what I argued in my point on option 2. Consequently, risk and uncertainty, picking up on Mia's point earlier, are 2 important factors influencing the choice. To reduce risk, exporting would enable SPL to test the market quicker, for example, monitoring product launches with German shoppers, bit of application, adjust promotion, pricing, and if shoppers prove enthusiastic about new surface cleaning and hand sanitizers application, then SPL may be able to direct some more of its UK output to the top selling international customers. So it's flexible. Now here's my balance. So whilst option has the potential for much larger international sales in the longer term, so recognizing that there is some merit in option 2, option 2 might be a better option once SPL has established the Sparkle brand overseas and built some consumer brand recognition. And then I've just sort of done a little bit of extra added value that if you really needed to meet some extra capacity, some extra output to meet maybe surging European demand, everybody wants some Sparkle cleaner, then actually the better option might be just to outsource some production for maybe a month or 2 to an existing factory somewhere else in Europe rather than setting one up. So we're adding some value to that conclusion by bringing in some new support for the option. And I reckon that would do it. I mean, Graham's looked through it. He reckons it's definitely in the 19-20 mark in terms of the 2 points and the conclusion. That's all you need. As I say, I think you can get away with less than that in your conclusion, slightly less, but that's deliberately written in a way to illustrate the technique. James is saying, do you need to repeat arguments in your conclusion? The ideal is that you don't bring in new arguments, but you bring in new application, or you develop a, and it depends on point and a little bit more detail to add some value to the conclusion, to help your judgment drive the response. But the most important thing is that your judgment answers the question. It's supported by the arguments that precede it, but then also it's balanced. It recognises there is some merit in the alternatives. There we go. That's 20 marker. So in conclusion, the 20 marker, it's just like the first 16 marker in paper 2. It's a decision recommendation question. What's different about it? 4 more marks. And stay focused on the case study business. You don't need to bring in any other industries. It's a really straightforward question. And don't overcomplicate things by trying to produce too many arguments for, too many arguments against. No time for that. Just answer clearly. So let's just move on to, for the last 5 minutes or so, we won't go through this in detail, but just want to highlight the fact that there is another open question in paper 3. Now, when you look at the analysis of student marks in paper 3, which is the lowest scoring paper traditionally of all 3, I think the average last year was 46.5, something like that. So 55 marks or so lost on paper 3. 2 reasons for that. One is students are tired, therefore not performing. Another reason is they run out of time. And they're running out of time because they're spending too long on the 12-mark questions, which are just the same as a 9-mark question. No need for a conclusion. Too many students writing conclusions for 12 markers when there's no marks. So the 12-mark question is just the same as a 9-mark question, just got 3 more marks. The 2 16 marks are just the same as 16 marks in paper 2. So you need to be allowing at least an hour for question 5 and question 6. The 20-mark question and the 24. So an hour, 50 minutes, 50 minutes to an hour. So just leave enough time to give the open question 6, a good go. Too many people are missing it out altogether, or it's literally a 5-minute job at the end of the exam. So you've got to leave enough time. It's just like the 16-mark open questions. What's the difference? Well, you've got a case study. Well, there's your first paragraph, but you need to bring in other contexts. So an extra 8 marks. So let's have a look at this one then. Now, obviously, you wouldn't necessarily get international markets, entering markets as 2 of the 6 questions, but we've written this case study to give it a theme. So let's say it was a 24 marker. So it's an open question. To what extent is entering international markets a good way for all businesses to grow? Well, over to you. We know that it is the case for SPL because they're in the UK. The UK market is quite mature. They need to grow overseas to achieve their objectives. So there's our first paragraph written for us. So we deal with the case study first. What about other situations? Can you give me any arguments or situations or reasons why it wouldn't be a good way for other businesses to grow? Why might that be the case? Nicole's asking, would you do the 24 marks first, then the rest? Absolutely not. I know there's one person in particular has come up with crazy ideas about how to answer these papers, which I just think are bonkers. Really are ridiculous. Answer the questions in which the questions are set. You can often bring in ideas, data, calculations, insights into later questions as you become more familiar with the case. So don't be taken in by people who think they've got a magical way of answering the questions in a stupid way. We all know who we're talking about. So what do you think? So we're looking for arguments for why entering international markets would not be a good way. Would not be a good way. So we know it's the case, that it is the case for SPL. So therefore we can use that. What do we think? Well, Luke's coming in with a really simple one. Yeah. I mean, sometimes the simplest arguments are the ones to develop. Small businesses, particularly sole traders, it's probably not for them. I mean, some small businesses, particularly those who maybe sell using e-commerce, do enter international markets, but the vast majority don't. They wouldn't know what exporting was, not not know how to do it, or not necessarily have products that are suitable. Joe's making a point that in some markets, you need to have locally tailored products that appeal directly to the needs and wants of consumers from that region or country. Well, if I'm sat here in the UK, am I really going to have the ability to understand specific needs and wants? Let's say I'm, I don't know, a clothing manufacturer or something else. Do I really understand the local needs and wants? Well, probably not. Therefore, entering an international market may not be suitable for us. William's making the point about it may not be suitable for some businesses who don't have the efficiency or the scale, or who can't compete based around unit costs. For example, maybe it's a labor-intensive process wherever it takes place in the world, but there's lower wage costs in different markets. Therefore, in other words, some businesses are uncompetitive or would find themselves to be uncompetitive if they tried to grow overseas. What else have we got here? Loads of great points coming in. So I'm just looking for arguments why it wouldn't be a good way for businesses to grow. Mir's making the point. Mir's back again. Having already talked about risk and uncertainty, which is an absolute cracking point, here's another one. So it may not be appropriate for businesses where, if they were to try to enter international markets, they encounter protectionism. And that could be tariffs, quotas, and other non-tariff barriers to doing business. So in other words, it wouldn't be a good idea. Joe's making the point. Maybe some businesses don't have the capability, the resources to understand the market. Maybe they have a different culture, so bringing Hofstadter in. This is awesome stuff. So you can see what we're doing here in our open question. It's just exactly the same as it was in our 16-mark open question in paper 2. We just need to bring in industries or situations. If you've got specific businesses, that's great. You don't have to use them to help make the counterpoint. Let's see what I went with. Just a quick reminder. It's an open question. Okay, so we need to make sure that it's whatever we write is focused around this issue of entering international markets and how and why that may be a good way to grow. So keep coming back to growth. Don't just make your answer a generic answer about international markets. It's like all of these questions, you have to unpick the question but provide a focused response. And here's a structure. Now, it's exactly the same structure as we did for the open questions in 16 markers. You don't have to use the case study in the argument for, but why wouldn't you? Because you spent the previous hour and a half writing about it. So it's a lot easier. And you can bring in other situations and other businesses that would also find entering international markets good for growth. So you don't have to restrict yourself to the case study business, in this case, SPL. But here I've just talked about SPL. So it's got a very ambitious growth objective, slow growth in the UK market. They've got a cash cow, haven't they? Cleaning products, but expanding into Europe might be a really good way to grow because it means that they're going to reach a much wider customer base, many tens of millions more people. Even better with free trade if they operate within the EU, and also it's a good way to grow because it's balanced growth, isn't it? It means that as we grow, we're becoming less reliant on one market, so we're less exposed to changes in different geographical markets. So I could easily write that argument for. It writes itself, doesn't it? We've just been writing about the case study. The argument against, you need to move out of the industry. So move away from the case study business. So in this case, I've picked a couple of other businesses or situations which are quite different from cleaning products. So I said that businesses may not have products that are specifically suited to a domestic or actually international market. For example, tea producers or Marmite or whatever it is, that actually we might make it in the UK. It's great for us in the UK, but actually it might not necessarily be a suitable product to meet the needs and wants of customers in international markets. You might also build the point that a number of people did in the live chat saying that actually small businesses in particular, are significantly under-resourced. They don't tend to have much experience about selling into international markets. They probably don't have the working capital, the resources to be able to fund the investment, and also their attitude to risk and uncertainty may be different. Therefore, for them, exporting or licensing or direct investment may not be a good way to grow. They may be better uses of their capital and their resources and their time. And as we know from the 16-mark open questions, we know what the answer is, don't we? We know what the answer is to an open question, which is there are some cases where it is a good way, there's some where it isn't. So you would always start with something like, there's no doubt that some businesses, such as SPL, should enter international markets to grow, but that's not to say all businesses will find it a good way to grow, and it depends on the business and the target market, and then just develop the judgment. But that is always going to be the answer for the open questions, isn't it? It will be for some, but not for others. It depends. So I guess what I'm saying is, don't be too worried about the 24 marker, except be worried if you've not left enough time for it. It's just like the 16 marker, but with a few more words. Give it a good go, but give your answer some contrasting contexts. Don't just use the case study business, because you're going to get capped in terms of your marks if you only use the case study business. So how long for the 24 marker? Gabrielle's asking. Well, it depends how long you've got left, but ideally 25 to 30 minutes if you can. If you can keep the time, that would be a good use of the last 25 to 30 minutes of your last ever AQA A-level business exam. There we go. So look, we're going to take a break for the weekend, and then we're going to come back next week. Check the timings on our YouTube channel for our AQA student clinic, Q&A about paper 3, Q&A about anything else that you've been struggling to revise, and hopefully maybe some gentle revision just to get you ready for our last ever session together before you take the exam. Hopefully have a really nice weekend, to get a chance to get out. Hopefully the sun shines. I think it will. Get out, get some exercise, look after yourself. That's the main thing now. You've done all the revision for paper 3. They can't ask anything that you haven't revised. So make sure you get some rest, and then a big effort next week, and then it's all over, isn't it? Another exam ticked off, and maybe even one of your last exams next week. Well, I've got all of these sessions, including yesterday's on the 12 marker, are available on Catch Up. Please do take a look at those. But for now, wishing you a great weekend. See you later.